Every time global tensions rise, someone's profits rise with it. When news channels talk about conflict, they focus on politics, borders, and security. But behind all of that, there is a parallel story, unfolding quietly, a financial story. Because while uncertainty creates fear for most industries, for one sector, it creates demand. And not just small demand. We're talking about contracts worth billions, sometimes even trillions of dollars. Let's start with a region that keeps appearing in global headlines, the Strait of Hormuz. This narrow passage controls a large portion of global oil supply. Whenever tensions rise here, markets react instantly. Oil prices jump, volatility increases. Investors become cautious. But here's something interesting. While many sectors start struggling during such uncertainty, a completely different sector begins to strengthen. The global defense industry. Companies like Lockheed Martin, Raytheon Technologies, and Northrop Grumman operate in a space where demand is not driven by consumer trends. It is driven by global risk. When tensions increase between countries, governments respond in a very predictable way. They prepare. Defense budgets expand. Military capabilities are upgraded. New systems are ordered. And these are not one-time purchases. These are long-term contracts that can stretch over years, sometimes decades. That means steady revenue, visibility, and scale. Here's where it becomes fascinating. Conflict doesn't just create destruction, it triggers financial movement. Money shifts from general economic spending into defense and security. And because these contracts are large and long-term, they create a stable pipeline for defense companies. So while markets may look uncertain on the surface, there is structured growth happening underneath. There's a slightly uncomfortable truth here. Most businesses slow down when uncertainty rises. This one speeds up. It's like insurance. You don't think about it when everything is calm. But the moment risk appears, demand suddenly increases. Now bring this into the stock market. When geopolitical tensions rise, sectors like tech or consumer goods can face pressure. But defense stocks often behave differently. Why? Because their revenue depends less on consumer confidence and more on government spending. And governments don't delay spending when security is at stake. They accelerate it. This is not just a US story. Countries across the world, including India, are increasing their defense capabilities. This creates a global network of contracts, suppliers, and partnerships. So even if you are investing in domestic markets, you are indirectly connected to global defense trends. And if you find these hidden connections between global events and money interesting, make sure to like this video and subscribe to WealthyKlicks because we break down such powerful financial stories every single day. What you're seeing here is not random. Tension leads to spending. Spending leads to contracts. Contracts lead to long-term revenue. And as long as uncertainty exists, this system continues to operate. Most investors focus only on what's visible: charts, earnings, headlines. But real opportunities often exist in what's not immediately obvious, in how money moves, not just where it sits. And here's the part many people miss. By the time a trend becomes obvious in the news, markets have already started reacting. Which means the real advantage comes from understanding these patterns early. So the next time you hear about rising global tensions, don't just think about risk. Think about direction. Because money in the market doesn't disappear, it simply moves to where demand is increasing. So tell me this, when the world gets uncertain, do you panic or do you look for where the money is quietly flowing? Drop your thoughts in the comments and subscribe to WealthyKlicks because every day we decode how money actually moves behind global events.